Um, Good morning. Assalamualaikum warahmatullahi wabarakatuh. I hope all of you are doing well. I hope all of you have the energy to stay focused on these discussions. My name is Cempaka Shamimi, and I'll be honored to serve you as the moderator for these discussions on the topic that is actually timely and highly significant for us, which is, can capital market drive for financial inclusions? We know that there's a billions of people in the world, right? But there's still many of them who doesn't have the access or are not supported by these former financial systems. The access for financial service like investment, saving, insurance, and also credit, which is actually the powerful instruments for empowering these peoples and elevating poverties, and also to stimulate the economic growth for the country. Today, we are going to discuss further on these questions. Therefore, we are joined by these insightful and also experienced panelists that will share on their different perspective in their sectors. First, we have the Mr. Afiq from the MISB.
Hello guys.
Second, we have the Mr. Nukman from the CFA.
Hello.
And third, we have Miss Umaira she is an investor for today.
Good morning, everyone.
Lastly, we have Miss Ainur. She is representative from the Security Commission Malaysia.
Hi.
So, to start off, I would like to ask broad questions. What do you believe the current relationship between financial market and also financial inclusion and capital markets? Are there a real potential for transformations?
Okay, let me start. Assalamualaikum everyone. To answer your question, let me ask the audience, either do you guys know about what is actually financial inclusion? Do you know what is financial inclusion, Omar?
No, Dato'.
What? You don't know?
No.
Okay, actually financial inclusion is how we give access to everyone to get the experience to the financial services. Like, the simplest thing is everyone should have the bank account. So if you have the bank account, means you are included in the financial inclusion. So capital market and financial inclusion are becoming more common in Malaysia, and yes, for me there is a potential for transformation. In the past, capital market were mostly for large companies and wealthy investors because, to invest is not cheap. And now, Bank Negara Malaysia has introduced few innovations like equity crowdfunding or peer-to-peer financing, so that it will make the small investors to invest and get the opportunities in the market. And for example, small entrepreneurs who cannot get bank loans are now raising funds directly from investor through regulated digital platforms. And if done right, capital market could be social mobility to be the bridge between the market and the investors. Yeah.
So, can I answer the question too?
Yes, sure.
So, as an investor who advocates for financial inclusion, I believe that the current relationship between capital markets and financial inclusion is growing but limited. So why do I say it's growing? It's growing because nowadays, especially in the fintech sector, we have innovations like digital banking and online payment platforms, which allows a larger number of people to have a greater access to these financial services. So also, financial inclusion is under the social element of ESG, which recently also seen a rise in the market. So people actually want to invest in this ESG. And I see that it's no. So there's also a larger capital which I believe is growing. It's flowing to these underserved communities and will still grow in the future as time goes by. And I see that it's limited because some of these inclusive businesses or projects, they have high risk and they lack of a good financial track record, which me as an investor still cautious that when we want to invest to these types of inclusive businesses. So like we have to do our own analysis or research. So yeah.
So thank you for both of the panels. So I agree with them that capital market is still growing. Now we're developing to the fintech company, like we have the digital banks and also online banking platforms. However, there are still many communities that are underbanked. Maybe I will say that due to the systemic and also economic conditions as well as the geographic limitations. So, Mr. Nukman, from your analysis, right? Can you explain further on this barrier that actually prevent the undeserved community to access to the capital market?
Yeah, sure. Firstly, thank you, moderator. So, Assalamualaikum and good morning, everyone. So, ladies and gentlemen, if we truly want to understand why undeserved communities remain excluded from capital markets, we must confront the systematic barriers head-on. First, there's the issues of financial literacy. Many simply don't understand how capital market works and why they should participate. Second, there's the deep-seated mistrust. Years of exclusion, complex jargon, and even predatory practices have left many skeptical of traditional financial institutions. Third, there's the structural obstacles like high minimum investments and geographic exclusions, whether due to the lack of physical branches or unreliable digital access may shut out low-income and rural populations before they even get started. And let's not overlook regulatory complexity. Rules designed for institutional investors often ignores the need of small participants. Add to that discriminatory credit policies and fintech solutions that fail to address language barriers or digital literacy gaps, and we see why this divide persists. And so on. But here's the critical point. This isn't just a financial problem. It is a social and economic one. Solving it demands more than just new products, and it requires targeted education, inclusive policy making, and technology that bridges the gap rather than widens it.
Okay, thank you for Mr. Nukman for the insightful key points. Okay, I think he mentions about the overlook of the regulatory complexity, where the rules actually are designed, rules of the institutional investor are actually neglect the small participants, right? Okay, but I would like to emphasize what Brother Afiq just said now. About the support from the security commissions and also Bank Negaras, their initiative on peer-to-peer financing and also equity crowdfunding. So, Ms. Anor, you are from the regulatory side. So, are you what your points of view on this? Are these initiatives really push toward the greater inclusions? What roles does this regulatory and also policy maker in order to achieve these missions?
Alright, thank you, Sister Chempaka. Actually, I really like how Brother Afiq framed it just now. And honestly, yes, we are seeing the real progress when it comes to making the financial capital market more inclusive, and especially when it has support from us as the regulators. So from the side of the Securities Commission, we believe that tools like what Brother Afiq has mentioned just now, which is equity crowdfunding and P2P financing or peer-to-peer financing, actually it's not just a buzzword. Actually, it's has become the game changers because they have already raised over 4 billion ringgit, and mostly for the small businesses. And that's money actually they raised outside the traditional banking system, and it's coming from the regular Malaysians who want to support these local entrepreneurs, and while they want to grow their investments to even with just a small amount. And these initiatives they can push the financial institutions and the wider ecosystems toward greater inclusion. So especially when people see that they can see that the funding and investment doesn't have to go through the big banks. And other than that, however, the access alone is not enough actually. So that's where we as the regulators play our biggest role there, because we are not just creating platforms, we also want to make sure that they are safe and transparent so that the investors know what they are doing. And through the programs, we have one program called InvestSmart. Our team has runs workshop, campus roadshows, also online content to boost the financial literacy, so that at the end of the day it's about giving people the confidence and the knowledge to participate wisely. And we also actively pushing for digital innovation under our digital strategy division, to make sure that this effort is not just a short-term effort. It is part of the bigger vision for the inclusive, fair and vibrant capital market.
Okay, I see. Alright, so just now you mentioned about the InvestSmart, right? For the investor empowerment tools, they can run workshop, online contents, and so on, to boost their financial literacy. Okay, so here's the things that before this we have the impact investment, also microfinance, right? That has been long praised as the instrument for financial inclusions. So for Miss Umaira, you are the investors, right?
Yes.
Now we have moving to the sustainable finance. So how do you think about the effectiveness of this sustainable finance in inclusive economic growth?
Okay, so sustainable finance promotes inclusive economic growth through strategies like, I think you all know, like ESG, SRI, and impact investing. So these tools are used to direct capital to projects and businesses that prioritize environmental protection, social equity, and also good governance, while also generating financial returns. So to see the effectiveness of it, in a report by Global Impact Investing Network, it states that over the past 5 years, there has been an increase in the amount of money that is being invested in impact investing, which grows over an average of 40% per year. So you can see that more and more investors want to invest not for the sake of gaining profit, but they invest for the social and also environmental cause also. It also states in the report that even though most of these impact investing firms are based in developed countries, most of their investment money are used to support these underserved regions such as in Africa or Southeast Asia. And if you look closer in the Malaysian context, right, we also have initiatives like Green SRI Sukuk or Green Bonds. We also have initiatives from Bank Negara Malaysia like the IT card program. And I can say one example which is successful that is executed through Green SRI Sukuk is the funding of solar energy panels in rural areas in Sabah. So now they have access to clean energy. And I also have another example which is from the ITCAD program, which utilizes Islamic microfinancing. Like they use instruments like zakat and wakaf to fund these B40 micro entrepreneurs for them to, gain sustainable income. And yeah, I think that's all. Is there any more?
So for your investor, personally, how do you, what metrics do you rely on? What methods that you for you to assess these socials and also financial returns?
Metrics, eh? Okay.
What
For metrics, I think for the financial side, I will obviously look into the return of investment of the company and their revenue growth and other financial items of the company to see if they are doing well. And for the social side, I check if the company really aligns with the sustainable development goals, and this information can obviously be seen in the annual report of the company. And I also use metrics like ESG scoring and also IRIS Plus or B Corp to see the ranking of the company. Yeah, I think that's all for me.
Okay, thank you, Ms. Umara. So before this, I mentioned about the microfinance, right? Microfinance institutions, before these are the hearts of these financial inclusion movement. So, Mr. Afiq, you are from the industry. So, what do you think? Does microfinance really relevant in today's landscape? Because we have the digital finance and also fintech, right?
Yeah. Okay, in my opinion, microfinance institutions continue to play a vital role in promoting the financial inclusion, especially in the local communities and rural communities. While fintech has expanded the digital access, MFIs, which is microfinance financial institutions, offer personalized services and on-the-ground presence that many digital platform cannot replicate. That said, the landscape is changing. Because why? Because MFIs now MFIs now are integrating the digital platforms like mobile banking, eKYC, and digital credit scoring, so that it can improve their outreach and operational efficiencies. In the Malaysian context, if the collaboration between the microfinance financial institution and the digital platforms are actually going well, they could serve as a bridge between the local communities and the broader financial system.
Okay, so thank you, Mr. Afiq, for the insightful information for us. So before we end, I would like to ask for the final thoughts from our panelists. So, what step could be taken to improve these financial inclusions in the next 5 years? I mean, what steps capital market could be taken?
Okay, so I would like to answer that question. So I would like to propose we focus on one game-changing initiative, that is government-backed retail bonds with 100 ringgit minimum investments, accessible through the mobile phones in people's pocket, and the agent networks are already serving rural communities. This isn't just about creating another financial product, it's about building a bridge between the two Malaysias, one that connects undeserved communities with the capital they need to grow, while giving ordinary Malaysians a stake in their nation's development through investment in affordable housing and rural finance. So the question is whether we can do this, it's whether we have the will to make it happen. So thank you, that's all from me.
So thank you for all the panelists from their sharing. So I would like to open for the Q&A sessions.
Alright, I have some question and sorry, aku tinggi sikit. Alright, so as far I know that you mentioned about urban area, right? So my question is that why should we care if the rural farmer or urban micro entrepreneurs access the capital market?
Okay, sorry, can you repeat?
Okay. So, if I'm not mistaken, you mentioned about the urban area, right? Why should we care if the rural farmers or urban micro entrepreneurs access the capital market?
Because when rural farmers or urban micro entrepreneurs, they can get access to capital markets through platform like equity crowdfunding or agricultural bonds. They can help to raise funds to expand their operations. So when they expand their operations, they need more workers, right? So by need more workers, they can create jobs for their communities, and they can improve the productivity for their innovation too. And also by this, they can break the dependency or informal, or informal lenders. So by enabling their participation, they're not like, how to mention, they're not like left behind from the people, they are not left behind from the people that live in the city. So we want them to know about this too.
Alright, thank you.
Alright, thank you. That's all from us. Thank you for listening.